Well. You know what time it is. Whew. We back, baby. Bitcoins, shitcoins, or NFTs. There's no greater feeling than hitting that sweet old time.
Hello, good afternoon, everyone. We are back with another episode of Setup Saturday. I hope you enjoyed the week. Bitcoin is higher than last week. And as you can see on my screen, my squiggly that I drew last August is still going strong. The only problem now are the election fears. So, Zero Cool, how are you?
Hello. Pretty good. Pretty calm week for myself, so all good.
All right. So, guys, first of all, I changed a bit the stream overlay and also some stream settings. So tell me if it's fine or if there are any problems. So I changed the title on top from Jack Green to Setup Saturday. It was an obvious change. I made some adjustments above. Here I put the Bitcoin and Ethereum logo. But most important, I improved the width a little bit. So before it was like 1610. Dimension, and now it's 16:9, which makes it now easier to show my whole screen and to make it a bit larger. And because I could make it larger, we've put our cameras a bit smaller because I think the most important thing is that you guys can see the charts instead of our faces. So tell me if you like it. Tell me if you see something we can improve, and let's go ahead, I think.
Yeah, let's go.
All right, so we're gonna go over to the technicals just afterwards. I just wanted to show this chart because it's going beautiful in the direction that I wanted to. What's the reason for this pump? Well, most important thing, like we always talk about, Fed just cut their interest rates by 50 basis points. So as we said last week, it was a 50-50. So the market didn't really know if it was gonna be 50 basis points or 25 basis points. The Fed did 50 basis points, which in my opinion is super bullish. There was a lot of controversial on all the social media platforms, most likely Twitter, that some analysts said 50 basis points is super bearish because that means that we will go into a recession, or that the Fed thinks a recession is coming. But to be honest, I always said, to me, that doesn't matter. We have the numbers, we have the employment numbers, so we know that if there's going to be a recession or not. If the Fed does 25 basis points or 50 basis points, that doesn't change from the fact that we already know the numbers, if it's going to be a recession or not. And just looking at the numbers, to me, there's no recession coming. So 50 basis points is super bullish. But then the thing you had to look at, and I tweeted it live, so you had to look at what Powell was saying. You had to look if he was bullish or not. And that's why Zero Cool and me, we were live following the Powell speech on the FOMC meeting. And you just had to hear at what he was saying. So he had all of it prepared. He was just reading something. But you had to look at his words, and I don't remember the exact words, but he said like three lines that were super bullish, and I immediately pressed the buy button with kind of a lot of my funds. And for the moment, it's going good, and that's what we talked about. So the cut wasn't really the most important thing. It was how Powell spoke about it, and to me, it was super positive. The only thing that was maybe a bit bearish, but not bearish, is the employment numbers. But like he said, it's mostly because of the immigration that there is a lot of unemployment. But I think because now the cutting cycle is starting, that a lot more companies will be able to lend more cash. It's less expensive for them to lend money, and so thus they can hire more people. So I think this cutting cycle, the employment will be resolved.
I think the words that we longed on were we have a strong economy was one of them that made us bullish. But yeah, I agree. The number didn't really matter. It's how he spoke about it, and they are confident. And I think those are the words you want to hear: confident, strong economy, blah, blah, blah.
And I have to give us some credit because like 4 or 5 months ago, we predicted that this meeting would be the meeting of the cut. And why did we say that? Because the next meeting is after the elections. And we were like kind of certain that they wanted to cut before these elections. You saw as well Senator Warren even wrote a letter to Fed Chairman Powell saying, yeah, you need to cut by 75 basis points. And yeah, that's mostly because they want to win the elections again, the Democrats. So it's better for them that the market is pumping before. And as you can see, the market is pumping after the first rate cut. I think even S&P is all-time high, Bitcoin pumped. Yeah, but the most important thing is like the stocks, the equities, because that's more of a measure of the economy. And yeah, so I wanted to show this one because, like I said just before, a lot of people were saying, yeah, because sometimes after a rate cut there is a recession coming, but that's not how it works. The only thing when we saw the stock market dropping after a rate cut was when we were entering a recession, but when it was super obvious, like in 2000, like in 2008, that was super obvious that we were going to go into a recession because it was a massive bubble. Right now, it's not that massive of a bubble as back then, and I think we're having a soft landing. So when there's no economy, when there's no recession coming, as you can see on this chart, the S&P, so the equities will rise afterwards, and I think that's what we're gonna see. We're gonna see equities pumping, gold pumping, real estate will go higher, and Bitcoin will follow. Bitcoin will go even higher. Did you? Oh yeah, you were gone. Zero cool.
My camera's going in and out. Especially bought a new one for this, and it's already like giving out. It's like a day old.
And so now the question is, where will the interest rates go? So as you can see, next meeting already, it's again a 50-50 for 50 basis points and 25 basis points. I think this one is less important. The more important thing is that we see regular cuts, so that they from now on will start cutting and cutting every meeting. That's the most important thing. And I think even the Fed doesn't know where they want to go. I saw this chart from Fayao, he posted it. It's a Bloomberg chart. And so this is the FOMC members, their projections for the next meetings, where they want to see the rates going. And as you can see, there is a lot of difference between what all the FOMC members think the rates will be projected in the years forward. So even they,
not even the meeting.
Even they don't know where it's going to be. So
there's no consensus, so to say.
But the consensus is that it's going lower, which is good for liquidity going into the system, because people can lend more money, can have a bigger credit, and then there will be more global liquidity. And that's my next point, basically. Oh, maybe, yeah, that's before I forget. That's also super important. Just, your camera? Your camera is back.
Yeah.
So we had the Fed interest rates, but so the second most important thing is, well, next to Europe, because Europe cut as well, I think, but that was 2 weeks ago. But the second most important thing is the Bank of Japan, because last time the Bank of Japan raised their interest rates. It was only 25 basis points. And you can see 25 basis points in July. And then we saw the crash, the equities crash, and Bitcoin followed, and Bitcoin crashed as well. And why was it? It was because the carry trade ended. So basically, a carry trade is that you go from a low, so you lend money in a low interest rate currency. So you lend some Japanese yen, and with that you buy US dollars or US equities, because they are in a hike cycle. And it stops when your local currency where you lended the money in raise their interest rates, and that's why we saw expensive. Yeah, and that's why we saw the equities crash in July. And I think this is one of the reasons that Japan said, okay, we're gonna keep interest rates at this level, so we don't want to see a massive crash. I'm also sure that they spoke with the Fed about this. They spoke with the US about this. It's all connected. But that's super bullish as well. I think we would have dropped if they raised their rates again. So that's super bullish. US cut interest rates, Japan stayed, Europe cut as well. So I have a clear sheet here, so you can see the US cut 50 basis points, and then every country as well. So ECB cut again. Canada is cutting again. The only one that's raising was Japan, and Japan stayed on this level again. So super bullish in terms of interest rates.
Yeah, look where Japan is compared to the others in percentage.
Yeah. Yeah, but
yeah, everything is fine in my part of the world. Very interesting.
So yeah, that was everything in terms of interest rates. But then the most important thing is how this is all connected to the global liquidity cycle, which is the main driver of Bitcoin's price. And as you can see, this was a very good one I saw recently from Raoul Pal. He's also always trying to track the global liquidity, even got a global liquidity model, which works very fine. And as you know from my article, Bitcoin lags global liquidity by about 8 to 12 weeks. So this is a good chart from Raoul Pal where he measured Bitcoin's price against global liquidity with a 10-week lead. And as you can see, global liquidity rised a lot. I got a very good visualization here from Cross Border Capital. You can see it here as well from Raoul Pal. So if you don't believe Raoul Pal, you can just look at Michael Howell's prediction. And normally, so if it's like it's always does it with a 10-week lead, Bitcoin should rise this quarter, and I think it will. I think it will rise. So Bitcoin looks great in the coming weeks. So just this chart, super important. But please do not share it because it's like a premium chart. But I still wanted to show it to you guys because it's a really good indication of global liquidity. It's from Cross Border Capital, Michael Howell himself. And as you can see, the global liquidity is rising again, and that's super bullish for risk markets and Bitcoin. I'm not going to stay on this topic, but so I think Q4 will be very bullish, and Q4 is always bullish. So that's why I wanted to show you guys the seasonality.
This meme.
No, I don't think it's a meme. I think it has some basis. So first of all, Bitcoin. So we just survived Q3, and Q3 is always the most bearish month for Bitcoin. It's always like that. It's always been like this. This Q3 was the same, super flat, didn't do anything. But now we go into Q4, and the average move on Q4 is 88% move on Bitcoin. I don't think this will be an 88% move again, but I think we will go to all-time highs. If not in Q4, it will be in Q1 2025.
I agree. Trending is up.
See, that you don't have to believe in seasonality, but the thing is just easy. You see global liquidity rising, and Bitcoin follows global liquidity by 8 to 12 month lead. So this is Q4. And Q4 looks super bullish in terms of global liquidity, in terms of interest rates, in terms of seasonality. So every metric is pointing towards a bullish Q4. And that's what I think we're going to have. We can look quickly at Ethereum, because Ethereum, I don't know if you guys remember, I didn't put it on my pin tweet again, but last year I made a chart where I wrote how Bitcoin or how crypto cycles work. So basically how it works is all the money goes into Bitcoin, and then afterwards, after a couple of months, it goes riskier down the curve. And you can see it here as well. So most bullish month for Bitcoin is Q4. And then generally, Q1 is the most bullish month for Ethereum. So right the quarter afterwards. And then normally just right behind that is altcoins turn.
I think now it will be more split, that alts will go with or before Ethereum. Ethereum has been very underperforming. But I think the God candle Ethereum is coming, and it's gonna rip faces off. It's probably gonna print like 500-600 bips in a single day candle or in a week candle, like surprise everybody.
Yeah, I think so
that's
too.
for later when we chart.
All right, and then so maybe I can say it to you guys. So you guys will see it obviously, but I got a surprise. So Thursday I have a meeting. Well, not really a meeting, more like we're gonna record the podcast. Me and Michael Howell, so the developer of the Global Liquidity Cycle and the director of Cross Border Capital. So if you guys want me to ask him anything, just send me a DM and I can ask him. So it will be in kind of podcast discussion interview with him in London. So I'm gonna visit him in London, and we're gonna record like a 1 or 2 hour podcast and about Bitcoin and global liquidity.
Very nice.
Moving along, so this is my last two charts, which I found really interesting. It's from Capital Investments, so from their newsletter. I think they put a newsletter out every month or every quarter. It's always very interesting. You can find it on their website, capitalinvestments.com, is it, I think? Oh, no, it's just capriolo.com. I see it here. And this is a very good chart, and I talked about it before as well. It's the Bitcoin production costs. What does it mean is when it costs more to mine Bitcoin than the current Bitcoin's price. And always after the halving, Bitcoin hash rate doubles. And so the miners that are having difficulties will have to adjust. So, or they even go bankrupt, or they have to sell their Bitcoin, or they just have to improve their current equipment to be able to handle the new hash rate. And as we know, hash rate keeps going up. So miners having some difficulties, there was capitulation of the miners. And always when we see miner capitulation, it's like a couple of weeks to months afterwards, we see Bitcoin going up. Why? Because the miners are not selling. And the miners are the ones normally with the most Bitcoin, and they have to sell it because they are forced sellers, because they have to sell it to pay back their equipment. And so if they're not selling, if the forced sellers are not selling, and we can see it in the next chart, so the Bitcoin mining companies are holding more than ever. So they are selling the least Bitcoin they ever did, which is also super bullish. And I think they know as well that this quarter is very good for Bitcoin. We're in the middle of a global liquidity expansion, in a rate cutting cycle. Everything is lining up perfectly for Bitcoin. Even nation states are now adopting Bitcoin, are buying Bitcoin. We got the ETFs as well, and a very nice news broke about this yesterday, and I think Zero Cool got something to say about that.
Yeah, last night around an hour after stock markets closed, the SEC approved the options on the IBIT. So IBIT is the ETF for BlackRock, meaning I think there's a lot more regulated money gonna come in and be able to play with the price of Bitcoin. It's been super hype in stock markets lately, and on like Wall Street's bets is 0-day options, meaning you buy an option and it expires at the end of the day, which you are basically saying, oh, it's going to go up or down, and the settlements at the end of the day. We're going to have that on the IBIT price for BlackRock. So I think we're going to see a load of money coming into option playing crypto. We already had it. Deribit is the biggest player in that, with billions in settlements each big quarter dates. But not every person on the planet had access to Deribit and options in crypto in general. Most people, if not all people, will have access to these options. This should be listed on stuff like Robinhood. So yeah, that's big news. What does it mean for the price? Hard to say. You have people who say, oh, it's going to kill volatility. You have people who say, oh, it's going to add volatility. I honestly don't really play 0-day options, so I think it will lower the volatility, but will push the price more. Like,
I think it will lower the volatility, but add the funding and the volume for big corporations to be able to play with bigger amount of funds.
I don't think really corporations play with options. It's more
yeah, I mean hedge funds. I meant
hedge funds. Hedge funds who play with options, and you can like buy IBIT as a spot allocation to Bitcoin and short it on options. That's a possibility now, and play the hedge there. So yeah, I'm not going to pretend that I know too much about this. I don't.
No, it's like you said, because sometimes there is not enough order book. There is not enough Bitcoin in the order book to be able to buy or to sell. So what these hedge funds do then is they sell a little bit, and then they hedge towards the other side, so they're able to sell their whole amount or to buy their whole amount. So I think this will just add more liquidity to buy or sell Bitcoin for big hedge funds.
Yep, big news. I think this will be like the main topic to talk about next week, and see how the market reacts and stuff. We had a little pump on this news, I think like 1% or something.
Just so you know, your camera is off again. I don't know.
Is it off again? Yeah. It was working when I tested it earlier. Strange. Yeah. Let's go to the charts.
Yeah, let's go.
All right. Let's start zoomed out, right? There we go. Yeah, it's still a range, people. It's been a range since March, you could even say, but it started with this candle up, so started in February. This is your range. And we're, give or take, smack in the middle. And unless it breaks out, honestly, I thought good chance that it was going to break out here. It didn't. It like kind of stalled. And this is when we started streaming again. We said, this looks good to go up, and it's going up. If you enable the volume range to see where the most volume was traded, the red line in the middle is the point of control. So this is where, on average, in this entire range, the most volume has been traded. And we're smack in the middle on it, and we're resting on top of it, which I think is a bullish thing. Normally, very, very simplified how this goes, if you go down from here, you do this, and then if you lose this, you do this, and you just play basically this as two ranges. That's how you can play this, very simplified. And we see this now. We saw this, and the next logical one is this, honestly. And yeah, that's your volume range. If you throw a couple of levels on there, just the weekly close, monthly close, quarterly open, stuff like that. You see that the quarter that we started in, we're above it. So we're above the point of control. We're above the quarterly. For me, that's super bullish.
We're also above the range, the Fibonacci range. Maybe you can see quickly on my screen here. It's I'm gonna show my screen as well real quick. We got like a short range here from here to here. And I think we're going to make support of the top line, and then we're just going to go upwards.
I longed more last night when we flipped that quarterly level, give or take, in the POC. It's holding on, but it's weekends, especially since the ETFs are here. Weekends, low volume, easier to manipulate the price, easier to keep the price steady. We've seen before that there are weekends where we have like less than a 1% range in price for extended periods of time, which is kind of funny to see and impossible to trade unless you're a scalp god. What else do we have? The VWAPs, which is honestly got the price. We need the price. Which is basically the same as we had before in the fixed range, but it's instead of static, it's dynamic, and it updates depending on what parameters you use: weekly, daily, quarterly. And you can see we're at a quarter value high, and the next one is the yearly value high, which is around 68,000. So that's the logical next target for me if we go up from here. And if we go down, anything this box should be support. And you have a little gap in here, which is, I see some people targeting. But on my timeline, people are getting more and more bearish again, which I think is a good fuel to go higher. I'm not bearish. I'm pretty bullish.
I just think a lot of people are still sidelines, and that is super bullish.
If we look at it from a weekly perspective, without any indicators, and it's pure market structure: high, low, lower high, lower low, lower high, up, and here. And to confirm that this is indeed not a lower low, but a lower high, we need to break this over. Actually, no, it's the high. I think you don't want to do the wicks, which is 65,000. So if you get a weekly close above here, structure is broken. Your downtrend structure is broken, and then the logical next step is up. And I think once we get a weekly close above 65,000, a lot of people are going to be like, that's a trend shift. I need to allocate. And then you'll see money pile in. And then is when I expect, if it starts trending, people will be like, let's say it's at 68,000, people are like, next pullback, I'm gonna add. And that pullback is never gonna come. It will never go to the logical area where you think, oh, this should retest this here at least once. It will just keep going. And the people who are waiting and are actually sidelined from all the way over here are going to be more and more tempted to buy. And where will they buy? I think around 70,000. And that's where I'm personally going to try to go for a short with like a stop in all-time high. Because I don't think personally that we're going to see all-time high like in a week or 2 or 3. I think it will take more time, and it will be at least one more fuck you event to weed out everybody. Like a very nasty drop, a big one.
In my opinion, it will be behind after the elections. We're not going to see all-time high before the elections. That would be stupid.
Mm-hmm. The problem that I have with the election date, it's like somewhere November. That's still more than 30 days away. That's so much time in crypto land to manipulate and play with the price, right? If elections were in 2 or 3 weeks, I would say yes. We'll probably trend slowly up towards it, but I don't think we continue trending for 30 days. That would be interesting.
Camera is off again, by the way.
I also noticed that my mouse is like cutting out, so maybe I needed a reboot or something of my computer. But yeah, that's the big picture overview. I'm bullish. I think we're gonna go 68 to 70 at least.
Next week?
Yeah. We need a news event because we've been having positive news, but it's not moving the market as much. A bit muted.
I don't think we necessarily need good news events. We have everything in our thing. We have stocks all-time high, gold pushing all-time highs, global liquidity at all-time highs. I think we will just slowly trend higher as well.
Mm-hmm. There's one setup that I took last night. Pretty risky going into a Friday, but on a Friday. But you had your little range here. Very quickly draw it. So this is your range. We swapped this and then we immediately did a 15 candle back into this range, and this is where I longed. So I'm long here. I'm gonna have my and originally I was like, all right, so it's logical targets. 63.5 this week here is a logical target, but then top of the range, like over here, just over its logical target. Then it's like, we're gonna go to 70k anyway, so I can just do this. And then it's just not a swing position. Then it's not a little scalp anymore, it's a swing position. So, but my stops are flat, meaning my stop loss is above where I entered. So if the price does come down, I close the trade break even, give or take. Little couple of dollars profit, but so let's say that's break even. So it's risk-free. It's a trade into the weekends. Like I said earlier, weekends don't have much volatility, so we'll see. I think this candle here, let's zoom into a little bit more. This 15-minute candle here is the news of the options. Honestly, we should have pumped more on it. We should have seen continuation. I think if you give this news on a Monday afternoon, the price just rips. Because people are trading then, and people, especially in traditional finance, TradFi, are very much of the mindset that it's weekend, we don't need to trade, we can trade because it's not open in the weekend, and they close out their positions before the weekend. I know several old school traders who've been doing this for way too long that very rarely keep open a position during the weekend. Because you don't know what's going to happen, and it's weekends. You're supposed to spend time with your friends and family.
Supposed
to. So yeah, they close in the weekends, and that's also a big reason why there's less volatility. There's less people interacting with the market. I think that's big level stuff. Where are we? Maybe some entries where we should look to enter. If this rolls over. We talked about this little gap that was here. Magnet here. There's a little gap here. Around 61.5, I think it is. Yeah, 61.5 to 61.3. This is I think a nice test, but I wouldn't blind bid it. I think if we see like a little bit of this, then I would enter here. and put my stop below. And I would like use it as a trigger. So if the price reaches this, I would buy 50%. And after that, I would open the rest of the position I want, like open in this box. So normally this would go like this. And then you fill this. And you add like 20% on top of the 50 you already have, and your average is like over here. And then after it starts yeeting upwards, you can change your stop underneath here, and your risk reward goes up. And once you're here, you can say, oh, I'm going to put my stop here, and then the trade is free. That's how I would play, or how I'm playing when we're trending up. That's how I open, that's how I add to a position, that's how I maintain it, and that's in a trending market where I feel we're gonna trend up. The others, if I'm playing at the range high and the range low, what I do is I mostly have levels where I want to bid. I think I am in from 85, 300 is my entry this time. So I use really wide stops, 10-15%, but my leverage is low, right? I'm doing ×3, so my stop or my liquidation is like 30%, give or take. I use 50% of that. And this feels uncomfortable because you're idling below your entry, but it's holding. So that's first indicator that it's not a bad entry. It is perfectly possible to enter and then do this. You need to have the skill and emotional capacity to cut if it just trends down. And the white stop is there just in case it's a black swan event and we nuke 40% in a single candle. That I do have stops, and I've been analyzing my trades from this year. That happened once to me, which is not too bad, but I lost quite some capital on that. And that was on the April nuke. Yeah, on this one. I don't know my entries exactly, but this one did kill my run my like hard stop. And it happens. It's there for a reason. I don't know where my liquidation was, but you have two options, right? You either have your stop, like you should always have a stop, even if it's like a 15-20% stop if you're on low leverage, or you don't have a stop and you risk the chance of getting liquidated and you lose everything. And I've also had that happen before. And no worries. I don't think there's a single trader that came into crypto that said, "Oh, I've never been liquidated before." Either bad risk management or not willing to use it, be humbled by the market, they call it. Because in a market like this, it is super easy to make money, right? Like, how do you lose money on a leg like this?
If you cap when you're targeting 12K.
Yeah, sure. If you short this, sure. But I don't know, if you long, even X50 and you do a 2% stop, this would be your liquidation, right? It's almost impossible. Even if you spot buy, you're up a lot of money. And this is the part of the curve where you think, oh, I figured out trading. I'm going to make so much money. I'm going to quit my job, do this full time, and get rich quick. And then you get wicks like this that like nuke. I don't know how much percent this is. Probably more than 10, yeah. So anything that entered up here with more than X10 is already liquidated. If they don't use risk rewards or risk management. Point being, the market will humble you at one point or another. If I do swing trades, which I usually do at like the highs and the lows of a range, because this has been a range. People call this chop. It's hard to trade. I've been really profitable in this, so I think I figured out that I'm better trading chop than trading a trending market. Yeah, I use wide stops, but I do use stops if I go for a swing trade, even if it's X2 or X3. Sometimes I've been cranking it up to like X4, 5, 6. I think even 8 recently. Riskier and riskier because 8% is like 10% move and you're liquidated, so stops are 2 or 3%. Even that, you're risking too much capital already if you think about it. But I feel like I'm blabbering on and we should move on.
Yeah. So I can start with Ethereum and then you go further. So Ethereum. So let's start with ETH-BTC. We talked about this last week, and it bounced perfectly off this downwards channel. So this was a perfect buying opportunity, downwards channel, and it's going upwards again. Like I said, I bought already on the top of this Fibonacci level, so at 0.04. But I wanted to buy a bit lower here, as I said, on the bottom of the channel. Unfortunately, I didn't buy here at BTC, but I think it's looking super bullish. ETH-BTC, I think with the rates coming down, altcoins will be in a much better position. And you see it on the Ethereum chart as well. For me, Ethereum, just using the Ishimoku cloud trading system is looking very bullish. So always when you see a flat cloud, a flat red cloud, this is super bullish. And the moment price enters this cloud, when the top of the cloud is flat, most of the times it goes towards the upper end of the cloud. And as you can see, it's super, super flat. We're nearing coming into the clouds. And for me, that's super bullish. Ethereum.
What's the price for your flat top cloud in the red? Because I think it overlines with my targets.
3,050.
Yeah.
So yeah, like I said, Ethereum BTC bullish. So you can start moving from Bitcoin to Ethereum. You shouldn't do everything. So I think for the moment my allocation is around 70% Bitcoin, 30 Ethereum. Maybe it's even more Bitcoin. It's like 80-20. So not all the way yet. So maybe I want it a bit lower. So like I said last week, or you trade time-based or you trade price-based. So price-based, I wanted to go a little lower, or I'm going to wait until the end of Q4 when we see the Bitcoin pump, when we know who won the elections. And then I will move more of my funds to Ethereum and even Solana and even more down the risk curve. But Ethereum charts, in my opinion, looking very bullish. Not going to buy here, but when you see it entering the cloud, you can be quite certain it will move towards the end of the cloud. And that's already a 15% move, easy money. So that's my takeaway. So don't do anything harsh. My portfolio allocation is 70-30, like I said. So I think this is how you should play it for the moment. So don't go too risky yet. But I think we will get there. Zero Cool, your turn.
Yep. The reason I asked what your price of the top was because it overlines perfectly with the yearly VWAP, and that's also my target. For me, the reason why I am loudly bullish on Ethereum is you have this yearly open here, and on the August 5th nuke, it held as support. On the September 6th nuke, it went through it and it reclaimed it pretty fast. Last weekend we retested it again. I longed here. I had an instant reaction from it. I was super happy, and then I had my stops break even and it hit. Unfortunately, and I relonged. I'm long from over here, just above the yearly open. But yeah, for me, yearly open, this is being defended unless we trend down and go underneath it. There is no reason to go up from here. And yeah, this asset has been underperforming every single thing on the market. It underperformed Litecoin, it underperformed Zcash, which is blows my mind. And there's a lot of Ethereum holders, especially people who've been in the market in crypto for a long time. They know this is a valuable asset. So everybody, if you just look at ETH-BTC, the downtrend, it's just this is just.
Mm-hmm. But I also want to say what I forgot about ETH-BTC. It's only the 5th time in history the RSI, I'm going to show it, is on the bottom of the RSI band. It's only the 5th time in history, and it touched it a couple of days ago again. And just if you trade RSI based, this is like a super buy opportunity on the ETH-BTC pair.
Yeah, it's a bit harder to trade ETH-BTC because it is dependent on not only ETH but also BTC, obviously, because it's ETH against BTC. But purely trading on this is something I used to do way back in like 2016, 2017 with like Fibonacci levels. It can work out, but I find that there's too much stuff impacting Bitcoin for this to be like a logical trade, as if, these are the parameters that are set, it's definitely going to go there. There's too many variables working with or against Bitcoin in my eyes. But I am super bullish. I'm more bullish on Ethereum short term than I am on Bitcoin, which is very weird to say. But yeah, we held the yearly open. For me, that's a big W, and I see no reason why this does not yeet to 3K at one point. The logical target that I've seen being thrown around is 2,710, I believe, give or take, which if you make a little range, if this is your range, this is your little deviation and deny, it's the top of your range, so that would be the first station, I guess. But where we are now, just at that yearly value low, accepting here, it screams continuation in my eyes, and it's been underperforming, so people are not allocated to it because it's been hurting everybody's allocation. Everybody who held positions in ETH has either capitulated or sold with a loss. And I think it's time for ETH to outperform everybody and do a face ripper of a candle of 10-20% like we had with the ETF announcement.
Yeah.
I think it's time.
Yeah, I think the fundamentals are still there. Every big corporation is building on Ethereum and is not building on Solana. Maybe some game studios or some scam meme tokens will build on Solana because it's quicker and easier to scam people. But every serious company, every serious big institution, like for example BlackRock, everything will be built on Ethereum because it's the more safe, more secure, more decentralized coin or even blockchain that exists at the moment.
Yep.
It's not something else.
I think I saw a statistic where it compared the amount of value secured by the Bitcoin hash rate against the amount of Ethereum staked. And there was more value staked in Ethereum than there is hash power for Bitcoin. So technically, on paper, Ethereum is a more secure network than Bitcoin, which is that metric suggests. I don't know if you can easily make it a one-on-one comparison because it is quite different. It's proof of stake against proof of work.
It's also a different use case.
Absolutely different use case. One could argue, or I think the argument is that Bitcoin is a store of value, while Ethereum is more like digital money with the smart contracts.
More like application layer system where all the applications will be built on top of it. A good analogy was, for example, Bitcoin is gold, and then Ethereum is oil to like
it drives the economy.
Yeah.
Yeah. I was gonna say if you say silver, then yeah, sure, because it's been underperforming like silver.
All right. We quit it here. It's 45 minutes in. And
yeah.
Outro predictions.
Yeah, let's go to the chart where we do where we are last time, right?
Yes. So I think this is the first time in months that I won. Again, it was super close, but we can measure it. I don't know if we made some rules.
Measure it.
So
I think we did say something.
2.7.
Okay.
And for example, from this to this is 4. We can measure it down as well. Yeah. So I won.
You won.
So my reasoning why I put it a bit lower and was just because we didn't know what Paul was gonna say. If I knew he was gonna be this bullish, I would have put it as well where you put it. But yeah, so okay, point for me. So 4-2, I'm coming back.
Yeah.
All right. This week, so I just follow my squiggly chart because it's just going. The correlation with the Bitcoin price is insane. So next week we will be here, I think. I'm gonna say 64.
Okay. That's fair.
I really don't think we're gonna go lower. I think if we go lower, maybe we touch the cloud, we make it support, or the midline of the range. The only problem is, and I wanted to say it when you were showing it, but I forget. If we just keep the same structure, if we make a lower high, then then we're kind of screwed. But I don't think we will have that. I think we will.
Something I don't think we touched on. We're bullish, but for a bear scenario, I think if we start closing below 60,000, like on a daily thing, I do think we're gonna test 50, and if 50 doesn't hold, we're testing 44 to 40.
I really don't think so. Only if Trump loses, maybe, and if equities drop. But I think every single macro indicator is pointing upwards. So
yeah, and that's why I'm bullish as well. But I always prepare for both scenarios. I like to look at other people opposing views. They can be completely wrong, but I'd like to understand the reasoning in them. And I do think if we lose 60, like if we lose this level and then we start closing below 60, that's 52 is not the worst idea or like a target to have.
Okay, your
always
turn.
Need to be ready. Keep the line at the same level. 66 and a bit, I think it was. Yeah, you can keep it at the exact same level for me.
Okay. Let's call it here. So thank you very much, Zero Cool, for coming on. Everyone, thank you for watching. And as always, leave a comment, leave a like. This helps us a lot. So we will be here every Saturday at 1 p.m. Central European time. We're just going to do the same, evaluate Bitcoin and Ethereum. And maybe later down the road, some altcoins when the time is right.
Some more alts. We used to do alts more because it was more favorable for alts, I think, to move. And just like with your cycle, money goes into Bitcoin and flows to alts. We'll get to alts in probably like 1 or 2 weeks, right?
Yeah, so we explain how we position ourselves, and at the moment it's not the right time to buy altcoins, so we're not talking about altcoins. It's as simple as that.
It's not the right time to buy altcoins, but you can start looking at which ones you would like to buy. I think it is time to make a shopping list and maybe spread a little money, not like 100% of your allocation you want in altcoins, but I did buy some alts today or yesterday. Very little allocations, some meme coin on Sui, for example, that I threw some money at. 100% expecting to lose it all, but just in case, if it does pop off, I'll be rich.
All right. Well, thank you, Zero Cool, and see you all.